sectors, those that are geared to economic activity.
Like construction?
So construction is a big one, retail and wholesale trade, surprisingly, due to their recent buoyancy, they've been laying off workers, financial services, manufacturing, and also mining. Mining is strange because we're seeing a recovery in the global economy. There's an undoubted recovery in the US economy, and that's lifting demand for metals. So our mining industry is really bucking the global trend because of labor factors unique to South Africa.
Given the fact that we're seeing strikes almost in every sector of the South African economy, naturally that is a concern with regard to skills development as well as improving our unemployment rate.
Well, strike activity makes good headlines. People, I think, take the impression from all of the strikes that we've seen that trade unions are on the rampage. They're on the warpath and they're gaining political power. But in fact, the opposite is true. Union membership is slowly but steadily declining. Union members feel that their unions are preoccupied with political rather than worker-related issues. So union membership is declining steadily, and at the same time, union members who participate in a strike is at an all-time low. Only 4% of union members on average turn out on a strike. So trade unions are actually in a crisis of relevance. That's the reality in the economy overall. In the private sector, only 1 in 7 workers is unionized, although in the public sector, 4 out of 5 workers are unionized. But unionization has really declined dramatically in the private sector. So we shouldn't take strikes to be more meaningful than they really are. But they give the government a good opportunity to make changes in the labour market because of the catastrophic consequences for exports, for the exchange rate, etc.
Just on that, apologies to interject there, Loane, but what do you make of the Free Market Foundation taking Parliament to court with regard to Section 32 of the labour legislation?
I think it's a fundamental development. There have been several of these developments. The Free Market Foundation's action, Lonmin's resistance to mine workers' demands last year, the opposition of farmers to agricultural workers' demands. We've also seen BMW standing up to government around wage costs. We're seeing a trend of business groupings and business-oriented think tanks standing up to government on the labour market and its issues. And I think this is going to continue. We're headed for a period of major strife between the business and labour communities in the coming period.
Thank you so much for your time, Loane. Definitely keen to see how the court ruling turns out there. But that was Loane Sharp, who's a labour economist at Adcorp. Now let's take a short break and look at, or rather, let's take a quick look at the markets. Not a break. So what are the markets doing at the moment? Well, Mete has hammered, or rather was hammered during the financial crisis. The share price of the auto parts manufacturer dipped as low as 5 Rand a share back in 2009. Since then, the share price has recovered to over 35 Rand a piece. Now, with it jumping by over 5% today on news that the manufacturer of automotive products has increased its exposure to the battery market in Turkey through a 2.2 billion Rand transaction. Theo Locke, who's the chief executive of Mete, joins us now for a little bit more. Theo, taking a look at the announcement that was made today, what was the driver behind the decision to move into the Turkey market, and in particular buy the Muklu and increase your stake in plastic?
Yeah, I think it's inconsistent with our strategy. something that was born out of the crisis that you've just mentioned is our 3x50% strategy, where we want 50% of our business coming from the OE sector, 50% of our business in aftermarket. But we identified that we had a specific green technology, and that's our start-stop batteries, and therefore we must protect it. And that 50% of our overall business must come from the battery sector. And we've been pursuing this acquisition for a period of almost 2.5, 3 years. And it's only 500 or 600 kilometers away from our dress rehearsal, as we call it, in the international acquisition, and that was Rambat in Romania. It's a significant acquisition. It's the #1 battery brand in Turkey and the Middle East. And it's got the leading aftermarket position and OE position in Turkey.
So how are you hoping that this transaction will transform your business?
Well, it automatically puts us in meeting our 50-50 strategy. That's very significant. 50% business OE, 50% aftermarket, and 50% of our business in batteries. Gives us spare capacity, and that's what made the acquisition also very interesting, of about a 2 million batteries per annum spare capacity. Gives us access to the European market, where the start-stop batteries are going to be required first. And it gives us access to a very strong brand in the Middle East and a strong share of countries that's got nice GDP growth rates. That's Russia and Turkey itself. It's a big exporter. 30% of our product from Mutlu goes to the Russian market as well. And you look at compounded annual growth rates in vehicle park growth in Turkey and in Russia, it's in the regions of the 7 or the 8% or the 5 or the 6% for Russia, far above where the South African growth rates are.
A rather large transaction. How are you hoping to fund this deal?
We've indicated that we'll do 50% of the funding from debt. The debt has already been secured thanks for our participation of our providers of capital, Barclays, ABSA. So we thank them for that. And 50% secured through a vendor placement structure with our shareholders in equity. And we thank them for their participation and support on this. So we're almost there from a funding securing point as well. So that's the funding.
Looking at the landscape of economic news out this week, we noticed that there have been strikes in the automotive sector, in particular components manufacturing. What impact has that had on your business?
We've obviously had a difficult 7 weeks. We've had 3 weeks of strikes at our customers and 3 weeks at us. But I think, we always focus on the negative. The positive is we've got a 3-year agreement. We've got stability for the next 3 years. We've got an automotive production system supported by the government in South Africa that can show nice uptick in volumes. Next 3 years of stability in the market, and we were fortunate, and that's part of the diversification strategy and hence the acquisition, that during this period, for instance, our Rambat facilities in Romania performed very well. And therefore, it's also that geographical diversification risk balancement with what's happening in South Africa. It's part of the strategic objective in buying the Mutlu Akku battery business in Turkey.
And the cost of the strikes, what kind of impact has it had on your numbers?
The short term is always negative. You immediately lose the sales. On our associates, unfortunate, they lose the income during that period. In the medium term, most of the car companies will put out plans to see where they can do some catchbacks. And what the long-term effect is what we're debating. How much of the contracts are going to be lost. But we mustn't forget the structural environment, especially with the support of government, the competitiveness of the South African support system. The APDP system is quite strong. So we are still hopeful that the long-term prospects is positive.
So you're not giving us any numbers on that one?
Can't.
Let's take a look at South Africa as an investment hub. Naturally, you've managed to diversify both geographically and moving into other markets. But what do you make of South Africa as an investment destination, given the fact that we're seeing these labour unrests, in particular in your sector?
Yeah, I think it's going to be challenging. Who's in control of delivering of a strategy of the business? Is it the management, the company, the people that you believe in, or is it some outside third-party influence with government, labour, that controls your destination? And that's what will make people scared to invest in South Africa. And that's what we found also attractive in the markets that we gain. We responsible for installing success with our strategy and not somebody else. And South Africa will need to address that. If we can't show delivery on strategies and investment plans, and outside influences that can control them, we are going to lose investments big time in this country.